Hi guys, it's Sterling Spectre here. Welcome back to the channel. Today's video we're going to be going over how the Ethereum merge could flip Bitcoin. So this has been a talk for a while about the flip of Ethereum to Bitcoin. We'll cover this all in the video, but the essential parts of it is basically Bitcoin has a dominance in the market and Ethereum is kind of projected to overtake that. Well, some people obviously believe that, others don't, but this article goes over it and then we'll talk more about it in the other tabs that I have open. So it says, what's the merge? The merge is the Ethereum transition from proof of work to proof of stake. This will end Ethereum mining, reducing 99% of its power usage. But what will the merge do? As it shows here on this graphic, it just says proof of work to proof of stake with the beacon chain coming in, and then they're going to add sharding after, which is basically going to expand the network so they can do more transactions on it. So a couple questions here. Will it lower the gas fees? Gas fees are caused by network demand. Switching to proof of stake has little impact on the demand, so gas fees won't change. This means layer 2 solutions are still needed post-merge, and there's a lot of great layer 2s to invest in. Obviously this has been kind of misconstrued over the past couple of years with this Ethereum merge, that this will actually lower gas fees. Turns out that it actually won't, because there's actual demand on the network which determines gas fees. It will just allow more transactions on the network in theory, and obviously less power demand on the network. So why merge? ETH's overall goal is to become more scalable, as I just said, meaning lower gas fees, faster transactions, and more transactions per second. The merge is an important step towards the ultimate goal of improving scalability, and it paves the way for what comes next. So if you have basically more lanes on a highway, you can have more cars, and then this is what scaling is. Obviously you have more lanes of scaling, and then you have basically more transactions on the network. And if these get congested, then that means that the gas fees will go up. But if you have more lanes, then they won't be as congested and the gas fees will be lower. So in terms, it will lower the gas fees if there's a lot more scaling going on. In my opinion, I think the scaling will go to a point where it's still allowing for high gas fees that we've seen in the previous years. In 2023, we get sharding, as I just said. Think of sharding as splitting the entire network into pieces called shards. This means that each node doesn't need to maintain the entire network, but its own shard. This increases transaction speed and cost. Will Ethereum flip Bitcoin? The Ethereum merge won't flip Bitcoin right away, but long term it creates a scenario in which flipping Bitcoin is possible. Some even argue that it's inevitable. Let's look at why. So obviously there's just that graphic there. Deflationary Ethereum. Miner rewards currently create 13k worth of ETH daily. Post-merge staking rewards create only 1.6k of ETH. At 16 Gwei, average gas price 1.6k ETH is burnt daily, bringing inflation to zero. With higher Gwei, we can see deflation, and deflationary ETH is bullish. So what they're talking about is burning coins. This is a kind of practice that staking coins do, where they burn a certain amount of coins to keep the supply down. They basically send it to a wallet which can't be accessed anymore. Basically can't be send transactions out of it, you can only send transactions into it. And if they basically burn the amount that staking rewards creates, that will basically keep the supply at a certain amount so that we don't see any deflation in the coin and we can only see inflation of price. Eco-friendly Ethereum. Many institutions won't touch Bitcoin due to its energy usage. Ethereum already uses less energy than Bitcoin. I don't think that's necessarily true in terms of the overall Ethereum energy usage and Bitcoin usage. The merge reduces it another 99%. Institutional adoption of crypto is needed for long-term growth, and post-merge Ethereum becomes attractive to institutions. Higher yields. Post-merge Ethereum staking yield should increase 50 to 100%, bringing it up to 6 to 8%. So if you go on Coinbase now, I think the staking that they had like an initial staking kind of offering that they were offering out something like 4% for your Ethereum. This wasn't actually on the chain, it was just to get people to move their coins into staking, and they'd pay back 4% in Ethereum, just so when it actually does come in, they've got it all set up to go and ready. Ethereum is seen as a safe long-term hold in crypto, almost par with Bitcoin. This with staking rewards soon as far exceed Bitcoin, many people will choose to hold Ethereum over Bitcoin. Finally, Bitcoin doesn't really have smart contracts. To attract business, you need to move on-chain, and they need to be able to build on-chain. This is the biggest limiting factor of Bitcoin. It's a store of value, but for now, that's all it is. Well, the main purpose of Bitcoin was to hedge against inflation, so it's kind of looked as at a different coin. It's like the gold of cryptocurrency, basically. That's always an analogy that everyone uses. Ethereum is actually to build stuff on top of. Bitcoin isn't really built to build stuff on top of because they want it as a store of value. The creator created this to have a store of value, not to do a load of transactions on the network. So when will the flip happen? Ethereum has the potential to flip Bitcoin. Ethereum isn't even 50% complete. When it gets sharded and all other features are coming in, there's little reason why it wouldn't flip it, unless Bitcoin becomes proof of stake and gets real smart contracts too. This is all the reasons why Ethereum could flip Bitcoin after the merge. Be sure to check out the other articles. I'll leave a link in the description for this article if you want to check it out. Overall, I don't think that Ethereum is going to be flipping Bitcoin anytime soon. Maybe it has the possibility if they keep up with the demands and the Ethereum team is, good to the smart contracts and stuff like that. But if we look at this Bitcoin dominance chart, we can see that Ethereum is kind of looking at around half of Bitcoin's wealth. Obviously, Bitcoin's sitting at 20,000 and Ethereum's sitting at 1,500. Obviously, when Bitcoin goes up to around 60,000, when we had that back in 2021, we could see that Bitcoin started to have more dominance over Ethereum. I don't really know the reason behind this, but it did have more dominance over Ethereum, and it's actually lost a bit of dominance right now just because the prices have been lower for Bitcoin and Ethereum's slightly higher in the percentage chart. If we look at this global cryptocurrency market, this is by CoinMarketCap, it just says here, major crypto assets by percentage of total market cap. So market cap is the big thing, obviously, because that equates to how much a coin's worth, plus how many coins are in circulation. So right here we can see that Bitcoin holds a 40% dominance and Ethereum only holds a 18% dominance. Well, that would be 19% if we're rounding it up. So it holds a 19% dominance. So Ethereum basically has to double their market cap without Bitcoin even moving their price at all, basically. We have other coins on there like Tether USD, BNB and XPR, but they aren't really close to Ethereum or Bitcoin. Tether obviously has been one of those coins that's kind of exploded onto the network and has obviously garnered a massive market cap and a big dominance on this chart. But if we look back here, we can see that Bitcoin in 2017 had a massive market dominance over Ethereum with 85%. And this is when Ethereum started taking off with Bitcoin. But if we move over to January 2021, when we had that bull run, you can see that Bitcoin obviously had a massive dominance over Ethereum. And that's what I was talking about earlier when we looked at the heat map of cryptocurrencies. This had a 71% dominance over a 10% of Ethereum. So right now, obviously, it's started to even out, and this is obviously a sign that maybe this flip could happen. But still, it would have to double their market cap without even Bitcoin moving at all in price. It is possible that Ethereum has a run after this merge, just because many people would be starting to use the network more because of the gas fees and the more transactions on the network, and institutions like to get involved with stuff that is kind of catering towards being a bank in some sort of way. And this is what this Ethereum sharding will do to this. It will basically make it to where they can have transactions not exactly matching those of banks, but actually way more than Bitcoin has. So overall, I don't think we're going to see a flip happen for a while, but it's possible that it could actually happen. If you guys did enjoy this video, please like and subscribe to the channel, and don't forget to click the link in the description for the Discord, where I'll be doing weekly updates on there. I'll just be talking about crypto investing and what's happening in the crypto mining space at the moment. Also, I'll leave links to all these articles in the description below.